Welcome back. Futures indicating another decline at the start of trading this morning. Take a look. The Dow Industrials are down 330 points right now. That's 2/3%. The Nasdaq is lower by 473. That's 1 2/3% lower as chip stocks, semiconductors, and AI-related names sell off this morning. All three major indices were lower yesterday, led by that sell-off in tech and semiconductor stocks in particular. The Nasdaq was down 387 as the Dow was down 105 at 4 o'clock on Wall Street yesterday. This morning, big tech, take a look, down across the board. Worst performer this morning, you've got stocks like Amazon and Microsoft down better than 2%. Alphabet dropping better than 4% yesterday after announcing a delay in the release of its new AI model. And chip makers this morning are looking like this. Take a look at what the major chip makers are doing, like Micron Technology, for example, is flat this morning. However, the worst performer this morning is AMD. Advanced Micro down 2.5%, as is NVIDIA. Micron actually just went positive. Taiwan Semiconductor declined yesterday after releasing its AI spending forecast, including $100 billion additional to build out its U.S. build-out of AI and data centers. SK Hynix still declining, dropping below its IPO price. That, of course, has been leading the South Korean market lower. This morning in the pre-market, SK Hynix is bouncing. It is up almost 5%. Joining me now is Prime Capital Financial Chief Investment Officer Will McGough. Will, good to see you. Thank you so much for being here. How do you see this movement in tech and AI right now? What's your reaction to this sell-off?
Yeah, thanks for having me on, Maria. And right now we're seeing some volatility in AI names, specifically the memory semiconductors. And, I think it's just really a pause in the overall trend higher. Market's a little disrupted right now with the Kiwi K3 AI model news out of Moonshot yesterday in China, which I actually think is a good thing. It's more competition globally for AI language models. And really the devil was in the details, in my opinion. All the initial reports is that the Kiwi model is just as expensive on a token basis as the American models, which I think is a good thing. So it shows that there is, a supported revenue model here for these language models and AI stocks going forward, which is just going to continue the trend of investing in the memory and chip names, in my opinion.
Yeah, I think you mentioned what went on in China overnight. Xi Jinping endorsed the building of open source artificial intelligence models. He's touting an approach that has helped the country catch up with the U.S. I wonder if this is an indication that, in fact, the U.S. is winning and China is getting nervous here. He spoke at this AI conference, casting China as a champion of openness. Suddenly, he wants open source technology around AI, Will.
Yeah, it doesn't make much sense when you think about how the Chinese operate. Their government over there is not very open, limited access information, yet they want the AI language models to be open source. It's kind of double-sided right there, which says everything that you need to know, that they're behind. Anthropic, OpenAI are leading the race here in America, which is a good thing.
Yeah, exactly right. What's your sense of inflation in oil? I mean, oil this morning is right around $80 a barrel. Take a look at the price of oil right now as the U.S. delivered more strikes against Iran overnight, striking key military targets, coastal surveillance, energy infrastructure, commercial traffic in the Strait of Hormuz slowing. In the meantime, and the U.S. hit bridges in Iran. Obviously, we're still in this. Will, your reaction?
Yeah, it's kind of a long game scenario here with the conflict in the Middle East. Doesn't seem like there's going to be any resolution in the short term. No geopolitical expert, but we can see the sensitivity of the oil markets with inflation, and we actually had the first backup in inflation. Some people are saying it's deflation, which is a little misleading in my opinion, but inflation was down month over month for the first time since COVID, which just again shows the sensitivity to oil prices having come in over the last couple of months. So is inflation going to be just as sensitive on the way up here as oil prices are $80, $85 higher right now? So it just really depends on the housing and all the other components of inflation as to whether energy offsets some of the progress being made there, and what the Fed does is going to be fun to watch, in my opinion.
So what do you want to do in terms of allocating capital right now, and what are you expecting out of the Fed? Interest rates this morning look like this, with Dallas Federal Reserve President Lori Logan saying the central bank should hike interest rates to fight higher inflation. Logan arguing the June inflation data showed progress but was not enough to reassure inflation is on the path toward the 2% Fed benchmark. This morning, however, yields are trading down. The 10-year down almost 3 basis points now at 4.52%. Data also led traders to believe that there's no longer a bet on a rate hike this month. Yesterday, Mohammed El-Arian told us, look, I'm not expecting a hike, but I'm also not expecting a cut. What about you, Will?
Yeah, I would agree with El-Arian here. It's that, you have all these task forces that have been put into place by Warsh. He's using a lot of rhetoric right now to hopefully control the markets and inflation. And it's funny, he talks about not giving forward guidance, but his rhetoric right now is very forward guidance, and the fact that he's going to really focus on inflation. So I don't really see the Fed doing much here. As you know, the administration wants lower rates. So it's going to be a little bit of pressure there for them not to raise. Inflation could probably come in looking a little bit better. Employment's back on track. So really there's not much reason for Warsh to do much here, especially as he's waiting on these task forces to get fired up and report back to him.
So how are you allocating capital right now then, Will?
Yeah, so I think that right now you've got a really good backdrop of earnings growth. Government spending is just more liquidity, more stimulus that's out there. You have tariff refunds. And so I would use these technical pullbacks, little bits of volatility to look to stay invested in the equity markets here through year end. Earnings growth 20 to 25% is an astronomically good number. And until we start to see earnings revisions come down or flatline, you've got to be looking towards the equity names here and taking advantage of the volatility, in my opinion.
All right, we will watch that and leave it there. Will, good to see you this morning. Thanks so much.
Thank you.
Will McGough joining us.